Hello and welcome to the World Battery Metals and Mining News for the 12th of August, 2024. China drives African lithium surge to lock in key battery metal. Chinese miners and refiners have latched onto Africa's lithium reserves, rapidly transforming the continent into a critical player in global lithium supply. Starting from nearly zero a decade ago, Africa now contributes nearly 11% of the world's lithium, poised to rise to 14% by 2028. Even as lithium prices have nosedived over 80% due to a mismatch between supply and EV sales, Chinese firms continue to pour investments into African projects, especially in countries like Zimbabwe, Mali, Namibia, and Nigeria. Most African lithium operations have been sustainable, even in low-price scenarios, with significant expansions slated for completion by 2030. The continent is seeing industrial-scale growth, albeit with a backdrop of transitional issues from informal mining activities, particularly in Nigeria. Western companies are also eyeing African lithium, driven by policy incentives like U.S. tax credits. This surge isn't just about numbers. It represents a fundamental shift in the geopolitical landscape of lithium production, subtly mocking Western squeamishness about China's entrenchment in the sector, while quietly emphasizing Africa's rising significance. Peru copper output slides nearly 12% in June. Copper production in Peru fell by 11.7% in June compared to the previous year, totaling 213,578 metric tons, as reported by the country's Energy and Mines Ministry. Over the first half of 2021, Peru produced 1.29 million tons, a 2.1% decline from the same period last year. Once the world's second-largest copper producer, Peru has now slipped to third place, overtaken by the Democratic Republic of Congo. The ministry anticipates annual production to reach 3.00 million tons, an increase from last year's 2.76 million tons, despite the hit from anti-government protests and a technical recession early in the year. The long-delayed Tia Maria project by Southern Copper, anticipated to commence production in 2027, is expected to provide a significant boost to the sector, although it has faced strong local opposition. Barrick CEO open to being a partner on the Cobre Panama mine. Barrick Gold, led by CEO Mark Bristow, has expressed readiness to partner in the Cobre Panama copper mine once the Panamanian government resolves its dispute with First Quantum Minerals, the current owner. The mine, crucial for 1% of global copper output and 5% of Panama's GDP, has been closed since November due to protests. With a new government under President José Raúl Mulino, clarity is expected next year. First Quantum is seeking $20 billion in arbitration over the closure. Despite the surge in copper prices driving deal fever in the industry, Bristow advocates for conservative investment strategies, wary of overpaying in a hot market. Barrick is eyeing potential acquisitions like Teck Resources, but acknowledges hurdles such as Teck's dual-class share structure. Given Barrick's strong balance sheet and Canadian roots, they are positioned well for future deals, provided they choose opportunities wisely. Gold Fields buys Osisko in $1.6 billion cash deal. South Africa's Gold Fields is snapping up Canada's Osisko Mining in a $1.6 billion deal, capitalizing on sky-high gold prices to diversify beyond its homeland. Paying a cozy 55% premium per share, Gold Fields snags sole ownership of Quebec's Windfall project, aiming to bring it into production by 2026 to 2027, producing around 300,000 ounces annually. This comes as a strategic move to offset dwindling output from aging mines in Ghana and Peru. The deal screams of ambition but also raises eyebrows. BMO analyst Raj Ray rightly questions the timing, noting potential risks and the company's already shaky progress with Chile's Salares Norte project. All in all, this acquisition is a bold yet precarious gambit, spurring investors to cross their fingers while reaching for their calculators. BHP, Rio Tinto, Qantas to invest $53 million in Australian carbon credit fund. BHP, Rio Tinto, and Qantas are throwing a combined $80 million into an Australian carbon credits fund aimed at reforestation projects, managed by Silva Capital, a venture between Rock Partners and C6 Investment Management. This fund seeks to garner $250 million to generate Australian carbon credit units, ACUs, through initiatives supported by Australia's Emissions Reduction Fund, ERF. The ERF primarily backs projects helping to avoid deforestation, rejuvenate native forests, or harvest methane from landfills. Credits can then be sold to either the government or to high-emission companies desperate to meet their emissions targets. Essentially, the scheme is blending corporate greenwashing with financial engineering, while promising to support farming communities and environmental restoration. I must say, it's an intriguing blend of capitalism and environmentalism. But let's not forget, this is driven more by industry self-preservation than purely altruistic motives. Unions force BHP into pay negotiations, demand Rio Tinto follows. BHP is currently navigating new industrial relations legislation in Australia, which mandates negotiations with unions about employee pay and conditions at its Pilbara iron ore sites, irrespective of majority workforce support. The Australian Workers' Union, Electrical Trades Union, and Australian Manufacturing Workers' Union have seized this opportunity to initiate bargaining. Amid claims that miners' wages and conditions aren't as rosy as assumed, pressure is also mounting on Rio Tinto to comply. Jobs and Skills Australia reports mining workers earn a median of $2,452 weekly, significantly higher than the national average of $1,600. Concerns from the Minerals Council and Rio Tinto suggest this could be just the start of a union-driven power grab, potentially heralding a return to the costly labor disputes of the 1980s. It's amusing to see how this legislative change, presumably designed for worker benefit, might end up serving as a fountain of bureaucratic chaos and disruptions for the mining giants. Lundin hit by worker strike at Caserones copper mine. Lundin Mining is facing a slowdown at its Caserones copper mine in Chile due to a strike initiated by a fraction of its workforce over a failed bargaining agreement. Despite the unrest involving about 5% of the total workforce, Lundin is engaging in talks to resolve the issues, maintaining its commitment to integrity and transparency. Earlier this year, the company successfully negotiated with another union, representing a similar portion of employees. Lundin recently increased its ownership in Caserones to 70%, enhancing its portfolio in northern Chile alongside the Candelaria mine and Josemaria project. Caserones is projected to churn out up to 130,000 tons of copper and 3,000 tons of molybdenum this year, indicating its critical role in Lundin's operations. Jiangxi Copper's subsidiary halts production after fatal accident. In a rather unfortunate turn of events, Jiangxi Copper's subsidiary, Shandong Human Smelting, has put its operations on hold following a deadly mishap involving a copper furnace that led to 3 fatalities and 14 injuries. The incident, reportedly resulting from an unanticipated spill, has prompted an immediate cessation of production while investigations are conducted. For context, Human Smelting, controlled by the copper juggernaut Jiangxi Copper since 2019, churned out over 203,000 metric tons of copper last year. While the left would no doubt pounce on this to disparage the mining industry, it's crucial we focus on advancing clean and safe mining technologies rather than sensationalizing accidents. Barrick Gold reports Q2 profit beat on higher output prices. Barrick Gold's latest quarterly results have pleasantly surprised Wall Street, riding high on soaring gold prices and solid production across its Nevada and Papua New Guinea operations. The gold giant reported a significant 19% leap in average realized gold prices, reaching $2,344 per ounce, complemented by a 22% rise in copper prices. Production-wise, Barrick churned out 948,000 ounces of gold, surpassing the earlier estimates of 905,800 ounces. The company's free cash flow catapulted over 400% to $340 million, paving the way for future mine expansion projects. Despite these financial triumphs, the company faces scrutiny over unresolved human rights violations allegations at its North Mara site. Barrick reaffirmed its gold production outlook, targeting between 3.9 million and 4.3 million ounces annually, aligning with analyst forecasts for 2024. While Barrick's strategic advances are commendable, the lingering human rights issues cast a shadow over its golden glow. Iron ore miners face pay rise bid from Australian worker unions. Unions in Australia's Pilbara region are gearing up for significant wage negotiations with mining behemoths like BHP and Rio Tinto in what seems to be the first collective bargaining effort in over a decade. With iron ore being Australia's leading export, contributing a remarkable 56% to the seaborne supply, this negotiation is pivotal. The Western Mine Workers Alliance, comprising the Mining and Energy Union and the Australian Workers Union, has been canvassing worker support to push this wage campaign, seizing an opportunity provided by recent labor law changes that permit bargaining without initial proof of worker support. While BHP has agreed to comply with the Fair Work Act, the Minerals Council of Australia is less than thrilled, decrying the move as a union power grab. Rio Tinto, for its part, is keeping mum but aligning with the council's stance. It seems we'll have to sit back and watch this union drama unfold in the iron-rich outback. LIS Energy snares $1.7 million growth grant. LIS Energy has bagged a $1.7 million grant from the Minister for Industry and Science's Industry Growth Program to build Australia's first lithium foil production line. This high-tech venture will transform lithium metal ingots into top-notch lithium foils, essential for high-energy battery anodes and innovative solid-state and semi-solid batteries. With the current imported foils being subpar, this move signals a strategic pivot towards domestic production, aiming to serve both local and international markets. CEO Lee Finnier highlights Australia's potential, given it produces over half the world's lithium ore, and anticipates a booming lithium foil demand, forecasted to hit $51 billion by 2032. It's a forward-thinking move, not just to boost battery technology, but also to leverage Australia's mining prowess, marking a significant step for the $80 million market cap company in the critical metals space. Finally, a rational move from down under, leveraging their natural resources rather than some baseless climate agenda. i-80 Gold shares jump on high-grade results at Cove property in Nevada. i-80 Gold shares surged following impressive high-grade results from underground drilling at its McCoy Cove property in Nevada, boasting gold concentrations like 48.3 grams per over 3 meters and 22.6 grams per over 7.1 meters. CEO Ewan Downey highlighted that these results bolster Cove as a foundational project for the company's growth. This is happening as gold prices hit historic highs, reaching $2,463.60 per ounce. Complementing previous drilling results, McCoy Cove, known for its high-grade gold-silver deposits, has a history of producing 3.3 million ounces of gold and over 100 million ounces of silver. With shares climbing 15% to 25 cents, the company is now valued at $462.9 million, though one could argue these junior miners are now getting the attention they deserve. Indian state-run miner NMDC's Q1 profit tops estimates on higher prices. India's state-run NMDC surprised analysts with a robust first-quarter profit of 19.84 billion rupees, approximately $236 million, outstripping the estimated 16.35 billion rupees despite a decline in sales caused by workers' strikes. While production and sales volumes slipped each month due to the ongoing strike since May, NMDC managed to cushion the blow by hiking iron ore prices, much to the ire of steelmakers like JSW Steel and Jindal Steel. The miner's revenue fell slightly to 53.78 billion rupees, just shy of the predicted 54.46 billion rupees, demonstrating the company's resilience amid operational disruptions. Perhaps NMDC took a page from the raise prices and pray playbook, making the most out of a tough quarter. Minbos attracts $15 million investment from Angolan fund. Emerging phosphate producer Minbos Resources has secured a substantial $10 million boost from Angola's sovereign wealth fund, Fundo Soberano de Angola (FSDA), to further develop its Cabinda phosphate fertilizer project. This investment forms part of FSDA's larger $250 million allocation to Angola's agricultural sector, aimed at stimulating economic growth. Interestingly, the backing from the FSDEA, validated through rigorous due diligence in association with South Africa's Industrial Development Corporation, helped Minbos's shares leap by over 20% intraday. It's touching to see such strategic approaches to bolster key sectors for diversification, as they move forward with regulatory formalities to finalize this capital injection. With a market cap of $58 million and $3.5 million in cash as of mid-2024, Minbos anticipates completing conditions for an additional $14 million in construction funding soon. Let's just hope all these bureaucratic hoops lead to tangible progress and not just more paperwork. Cassius Mining to join Saudi Arabian critical minerals hunt. Cassius Mining, ACMD, has struck a Memorandum of Understanding, MOU, with Sijia Gulf Group, aiming to expedite the exploration of critical minerals in Saudi Arabia. This is all in line with Saudi Arabia's ambitious Vision 2030 strategy, which seeks to unlock the kingdom's undervalued mineral wealth. The MOU is expected to evolve into a joint venture, dividing interests equally between the two companies, with Cassius leveraging incentives from the Ministry of Industry and Mineral Resources, Myanmar, to cover exploration costs. Sijia will also play a key role in securing funds by connecting Cassius with potential investors. Their primary focus will be on gold and copper exploration, although other critical minerals aren't off the table. Cassius's CEO, James Arcudis, highlights the significant support from various partners that made this breakthrough possible, underscoring enduring relations with the consulate in Sydney and Myanmar in Riyadh.